afternoon from Los Angeles and happy Monday. It's Alyssa Corum and Ed Carson here with a look at the stock market today. And on today's show, we're taking a look at the FANG stocks, which got hit really hard today, but also the leading software group finally has succumbed to the downside. So we'll get further into that, but first let's take a look at the major indexes. We had the Nasdaq getting the hardest hit, down about 1.6% today. The S&P 500 finished down about 0.3% in comparison, and the Dow and the Russell actually finished around flat, maybe slightly higher it looks like. So let's take a look at the chart of the Nasdaq, and I mean the selling is just pretty brutal by looking at this chart.
Yeah, it was pretty brutal. And the big techs, and we'll get to the FANGs, but also Microsoft, a lot of big names, really hard hit. It was, I mean, yeah, it's nice that the Dow and the S&P didn't fall that much, but it's also, they've been selling off a lot. It's not like they're in great situations either. Yeah, the Nasdaq, which undercut the 200-day last week, really falling there. A lot of the gains now from that big, powerful rally from the end of 2018 to basically May. That's been wiped out pretty quickly here, and the headlines are just negative. I mean, not only these FANG reports, but also just the China trade war, Mexico trade war. There was weak manufacturing data. I mean, you look around, there's just not really good reasons to be positive right now.
That's right, and we are able to look at the market with a certain perspective that allows us to be able to time the market somewhat. It's when you're seeing this kind of selling, that's not, a time to think, oh, stocks are on sale right now. We don't know when this bleeding will stop at this point.
Yeah, you saw what happened with the 2008 corrections, actually, and you see the one over there. So you don't know how far it's going to go. We called a correction pretty early, but it was a good call, I think, back on May 13th or so, and obviously the market has not done well since.
That's right. We had that Q4 2018 correction, and now we're trading back to the levels where we were, I think, early February.
Yeah.
So we've erased a lot of the gains, but if you look at IBD's market timing strategies, we were able to, in a sense, guard ourselves from these worse days that we're seeing right now. Well, let's take a look at a few individual names. We mentioned antitrust concerns. So Google falling sharply today on reports that the Justice Department is gearing up for an antitrust probe here. So let's take a look at shares of Google today, which fell about 6%, a little bit off of the intraday low, but this was a pretty ugly looking chart before today.
Yeah, it was pretty ugly. That they had hit a record high and then they came out with earnings. It was just a great example of why it's really risky to buy ahead of earnings. Revenue growth was slowing, and ever since then it's been tanking. What's interesting, it looks like the FTC and the Justice Department are splitting up who's going to look at what. And so the DOJ is going to look at Google and Apple, and the FTC is going to look at Amazon and Facebook. And so the news kept on getting worse, because at first it was like, oh, over the weekend it was Google going to be under pressure. But then if you look at Facebook and Amazon, we're going to look at those charts. Those look pretty terrible too.
Right, and that in itself a recipe for a sell-off. And like you said, there's all of these other factors too. And like you said, the stock gapping down on earnings, and it just got worse from there. So if you did get trapped into this and think, oh, well, maybe I'll hold after the gap down, how much worse can it get? Well, it got a lot worse after that.
Yeah, and this regulatory probes, it could take years for these things to have an impact. I mean, it may just be minimal things, like things that they don't get to do. Maybe they don't get to do a merger. Maybe they don't go into a new market because they're worried about, the antitrust police basically cracking down. But it could be even more serious. I mean, there's politicians, presidential contenders who say we should break these companies up. So there's, investors have sort of ignored these risks, and we wrote about this a couple months ago. Jed Graham did a nice story about that a couple months ago, and we updated that with some of the news today. But I'd definitely check it out, because it's been building here for a while.
That's right. Those concerns coming to a head here, it looks like. And we also want to take a look at Facebook, which finished the day down 7.5% in heavy volume. And on Friday, it fell below its 50-day line. Now plunging even further. It looks like it closed off of its 200-day line by just a little bit here. It was trying to form a cup with handle, but now it looks like that base building has been ruined a little bit by this drop today.
And I think part of it is also when you think about the ones like, oh, people don't like big tech, they really don't like Facebook. I mean, that's when everybody seems to hate. Now, whether or not people still use it, and they still use Instagram, but there doesn't have any brand appeal. There's no big political support for Silicon Valley, which everybody used to back. I mean, Republicans liked the free market aspect, and the left liked the sort of the social liberal attitudes of Silicon Valley. Nobody likes Facebook anymore.
Right.
So
this has almost been brewing for a while.
It's been brewing for a while. And if we take a look at Amazon, which also had a really bad close, that one had a pretty negative line. That one stock fell through its 200-day line today, so
right.
that's been having real trouble.
Yeah, Amazon's chart looks similar to that of Facebook, except for the fact that Amazon's now below its 200-day. Facebook's still holding on to that level, but Amazon dropped about 4.6% today in heavy volume. So all this to say that these FANG stocks are not faring very well right now. They had formed deep bases. It looked like they were, coming up the right side, finally maybe breaking out again, but now it's not looking too good.
No, it is not.
And also, speaking of breakouts, a group that we had seen a lot of breakouts and big runs this year were out of the software sector. So we're going to take a look at the iShares Expanded Tech Software ETF, IGV, to take a look at that. Software got hit really hard today. So IGV, this ETF, fell about 3.6% in heavy volume. So I guess this kind of underscores the environment that we're in if even the leading group is now tumbling pretty hard.
Yeah, it was really sort of remarkable how well the growth stocks, especially software, had held up in May, because normally growth stocks do sell off quite a bit in a correction because they tend to be high value and people turn from hope to fear,
right,
and they sell those off. But this had held up, and you can see it is not holding up now. And that can happen. You can see stocks or groups hold up and then suddenly they crack. And this might be the most disturbing part of today's action because, the FANG stocks, they really weren't leading the market.
Right.
I mean, they're giant, they're moving the market down, but Microsoft, Twilio, there's a lot of stocks breaking below their 50-day line. Adobe, which was near its 50-day line, falling sharply. So it's really the top names really hard hit today. I mean, there are some groups that are still doing okay, but this is really troubling. So, if people thought, oh, my stock is doing well, if you had one of these, well, it's probably not doing so well now.
Right, exactly. So what does that mean? Well, if you're not in cash yet, hopefully you are. If you're a position trader, we don't advocate buying stocks when the market is in a correction.
Yeah, and this shows you why.
Exactly. All right, everyone, thank you so much for watching today. For more on the market and individual stocks, make sure you head to investors.com. And you can also check out our content across social media, whether that is on Facebook, Instagram, YouTube, or Twitter, so you can stay up to date on all the latest. Thanks again for watching, and we'll see you right back here tomorrow.